Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another episode of the Coffee Hour. And thank God today is Friday. This week has been absolute hell for the stock market. But today we are looking not so well. But we might have some better developments coming over the weekend. So hopefully those do, actually occur and materialize. One has to do with the conflict in the Middle East, which we'll be covering here just briefly. We'll also be talking about an update for the Clarity Act, which I think is a big deal. So we'll hear something on Monday. We're going to cover really just some very brief news. There's really not a whole lot to go over. I think the stream's probably going to be a little shorter than usual. And I don't want to keep you guys. All right. Today is Friday, of course, so of course, after this stream, go out, enjoy the weekend, touch some grass, get off finance land, finance tube, etc. Okay. So anyways, want to check and see what we have in the chat from Sid the Mordor. We have at this point, I've got so much red light therapy that I'll live forever. And you know what? I checked my portfolio this morning and I was just like, oh, that's a lot of red. That is a lot of red. All right. So anyways, we also have Sergio in the chat. Red vine. I guess I don't even know what that means, but anyways, yep. What is that thing from the Shining or Shitting or whatever it was? The Shining, I think it was red rum, right? Yeah. Anyways, you guys know what I'm trying to say. Anyways, we got Sean in the chat. Hey, welcome back. Super straight guy. Bedtime for the old people. Yeah, I'm one of them. I'm definitely getting on with my age. I am old, rickety, joints are hurting where there shouldn't be no hurt. Everything is just falling apart on me. Yeah, you know what? Buy the dip. Funny thing, maybe I'll pull it up. I don't know. YouTube gods might get mad at me. Let's see. I need a pool, cigar, and adult beverage or adult drink. Brother, that is where I'm heading to right after this because I definitely am yearning for a nice cigar, especially after this week. So I don't know about the adult beverage. It is still pretty early, but, a cigar and a coffee goes really well together. Surprisingly, if you don't want to have an alcoholic beverage, coffee does really, really does pair well with a nice cigar. Okay, let's see what else we got. Nibble on the dip, says Sean, and then we have Sergio saying wine. Sorry, I already had some. And then Super Straight Guy says it was an 80s song, Red Wine. Oh, okay. Well, hell, I learned something new today. All right. Anyways, guys, thanks for joining. Let's get into it. All right, let's get into this stream. Again, I don't know how long the stream is going to be. It might be a really short stream. All right, because there just wasn't a whole ton of new developments, things like that from what I could see. But I will try my best to at least get that info out to you guys and keep things a little entertaining. All right, so as always, appreciate you guys joining me for this channel. For the first one, we're going to watch this video, okay? If that doesn't pump you up, I don't know what will, but I am tired of all this winning. Okay, here we go. Let's get our red light therapy in today. All right, so here we go. Everything is down. Everything is doing terribly. Okay, I'm not going to even front here. Let's take a look at the futures. All right, so again, oil is still continuing to climb. We see crude oil Brent up at 109, and then we see crude oil WTI at 98. Probably will be about 100. Maybe even higher than 100 once Monday comes around, right? Once the markets open back up. Everything else is just absolutely getting slaughtered. It looks like the bonds actually came down a little bit, which is nice. But, not enough to really make a difference. We have gold, silver, obviously not doing well here either. So there just seemed to be really nothing that did well today. Everything sold off. And there was, and I wish I saved it, but it was from the Kobesi report. There was, some text messages or not some text messages. There were some messages coming from Trump as the market was, moving about, and his words obviously carry a lot of weight. Let me see if I can try to find that while I, continue talking here. But anyways, what we're going to be oh, here it is. Actually, let's take a quick look at this. So from the Kobesi letter, what just happened? Okay, 2:30 p.m. today, CBS News reported that President Trump was considering boots on the ground in Iran. Okay, and that's when everything started to fall. I still think there might be a potential for boots on ground, but it'll be in a limited capacity. Unless something happened or something was said behind closed doors, I have not found any news about that. But you don't send, a whole Marine Expeditionary Unit to the Middle East with a bunch of new aircraft and request $200 billion, if you're just going to be closing up shop there. So we'll see. But then at 3:43 p.m., President Trump said, I don't want to do a ceasefire with Iran, with the S&P 500 hitting a new 2026 low. Exactly 90 minutes later at 5:13 p.m., President Trump said the U.S. is considering winding down the war with Iran, which we'll be covering here in a moment. Between the 3:43 p.m. and 5:13 p.m. comments, the S&P 500 had already nearly risen 1% on no news. Okay, by 6:15, the S&P 500 rallied 1.8% from its low, adding $900 billion in market cap. All right. So, his words obviously carry weight and they can change on a moment's notice. So everyone, you guys need to really be careful. Be careful out there, especially if you're going short or going long. I have friends who do trades who are actively trading on the markets. And man, they say it is brutal with Trump in power because it's just, you don't know what he's going to say. He's always flip-flopping. It makes it really, really hard for a trading environment. Man, we got Julio up in the chat. Click the like button. I appreciate you, man. Thank you so much for joining. All right. And let's see. We also have Brett Langridge, if I'm not mispronouncing that, taking spring break in Hawaii. Well, congratulations, man. Hawaii, I heard, is a very beautiful place. I've never been. Always wanted to go. Just never had the chance to get out there. All right. So anyway, big deal, right? So we looked at the VIX and you guys saw that the VIX was trending up to 29, right? 29. That is absolutely insane that it reached that level because it seemed like it was just going to continue going higher. And this is why, good news, right? Or in this case, it was really good news on a Friday, right? Which is a change of pace because it's usually for Trump's playbook. It's bad news on a Friday and then good news Sunday night or Monday morning, right? So maybe this is a flip-flop. Good news on a Friday, but then we're going to get hit with really bad news Sunday or into Monday morning, right? We'll wait and see what happens, but that's typically the playbook with this administration. So don't consider this a rally. Don't consider this a relief rally or that we're going to go climb higher. I really don't think so. The S&P 500 is already down 5% for the year to date. It's already down 5%. All right, we're closing in on correction territory. Correction territory is about 10% on the index. As a matter of fact, let's take a look at what QQQ is looking like. Let's see, QQQ. So year to date, down about 5% as well. So again, both indexes are approaching correction territory. And I mean, I don't have to, you guys don't have to be a genius. I'm not a genius here. Definitely I'm not a genius, but I mean, you guys can just see from this very basic chart that there is a trend forming and it's going south for the spring. So, I really still think that there's going to be a continued sell-off. It's going to be a grind lower scenario. We have Julio says, I need, let me hide that. I'm not reading that. I'm not reading that, man. Man, Julio, you trying to get me in trouble over here. Anyways, let's take a look at the fear and greed index. All right, fear and greed, 15. We are in extreme fear. This is not good. All right, this is obviously not good. And that's because the index, the VIX, was spiking up to close to 30. All right, just so you guys understand, the VIX is volatility, right? It can go either which way. If we look at the last year, you guys see that in April, it reached a high of 52. Okay. And let's see, it was April. Yeah. And then it kind of started climbing down. And then we could see back in October when we had, the liquidation events occur for Bitcoin. And then we had, the market starting to sell off again. That was at around 25. And then when we started to see the real big sell off in November, that was at 26. So we've been chopping pretty bad these last couple of weeks. And we're definitely going to be hitting 30 at some point, I think. And let's see what else we got. So anyways, S&P 500, obviously not doing well. Software tech sold off as well, not doing well year to date, still down 20%. For those who are new to the stream, we just like to look at the tech software ETF sector because it's kind of an indicator for risk on type of environment if money is flowing back into software. Software has been hit with the SaaS apocalypse, and it just seems like there's no end in sight. But we'll see. If you bought in at the low, sometime in February, well, you're still up about 14. Well, you're still up about 7 or 8%. So good if you were able to buy that dip. Speaking of dip, we'll get back to that dip in a moment. Gold continuing to sell off. Nobody really knows what the heck is going on. There's a lot of speculation out there that there's potentially, I want to say mismanagement, but that's not the word. Not misrepresentation, manipulation. That's the word. Thank you. That there's manipulation on paper gold, right? Paper gold and paper silver. People are saying that, we are heading for $50 silver, which definitely looks like it's in the cards. We're having a pullback for gold. Usually gold in these environments should do well, but it's not doing well. So, there's some speculation out there that there's manipulation, but you also have a narrative out there that, the Gulf Coast is going to be selling their gold reserves in order to raise cash, right? In order to have cash available for their central banks, for their economies, for their countries. Now, the GCC makes up, Qatar, Bahrain, Kuwait, Saudi Arabia, and I always forget the last two, the United Arab Emirates. And I always forget the sixth one. I want to say it's Iraq. But anyways, you have some of these, the narrative saying that these countries are going to start selling their gold in order to, have or raise some cash, which I find is hard to believe because these countries are flush with cash. So let's see what else we also have going on with Bitcoin. All right, Bitcoin hovering at the 70K range. All right, we had a little bit of a dip. It's actually been performing pretty damn well despite everything going on. Again, we were at 75,000, and then we had a pretty bad sell-off around the Federal Reserve having their press conference, keeping rates steady. So that should not have been a surprise to anybody. I mean, pretty sure the market already knew that the rates were going to be steady. But over the last month, again, up 4.22%, right? Whereas if we look at gold, down 11.79%. And then for silver, which is more of an industrial metal, down basically 20%, right? So Bitcoin is actually doing pretty well over the last month. All right, year to date, still down about 20%, however. All right. But we have some good news coming around the corner. Okay. We just have to stay a little more engaged here. But actually, that's not it. That's not what I wanted to look at. We had from Senator Cynthia Loomis. Okay, I'm gonna front run this since I'm already on it. I'm gonna front run this, and then we'll get back to geopolitics. Senator Cynthia Loomis posted this, and if you don't know who she is, she's she's on the, I forget which committee now that I'm drawing a blank, but it's like the banking committee. She's been a very big proponent for the Clarity Act and getting the Clarity Act completely taken care of and passed. So she's, basically a crypto advocate. But she posted this, right? So she posted this, and later this came out. Senators say they've reached a compromise on yield to advance the crypto market bill, i.e. the Clarity Act. All right, one of the major sticking points on the crypto market structure bill may be resolved, at least enough to move forward toward a Senate hearing to advance the bill. Okay, I'm just going to kind of summarize all this stuff for you and then just pull out a couple key points. All right, 2 key senators have reportedly come to a tentative deal on stablecoin yield, according to Politico, potentially clearing a path for the Crypto Clarity Act. The sticking point on the stablecoin rewards program isn't the only thing holding up bipartisan support for the bill, but it was a major roadblock. Industry insiders have heard a compromise was struck, but they told CoinDesk they have not seen details that have been ironed out. The rest of the article is really just, it's kind of a nothing burger. They're talking about, just what was they have no details of what was actually discussed, right? So they give just a kind of a historical take on what's been going on, but there's really no information in this article. But this is really what I wanted to point out. A person familiar with the negotiations told CoinDesk that details were not expected to be circulated among stakeholders, that is the crypto and banking industries, before Monday. So Monday, we could potentially have something. All right, Monday, maybe next week sometime, we could potentially have more news about this, which is a huge deal because a lot of people are waiting on this. All right, lawmakers have suggested in recent days that the Clarity Act could get a Senate Banking Committee hearing late next month if it's approved there. it advances towards the Senate floor, though it first needs to be melded with a similar version that already passed in the Senate Agricultural Committee. All right, Senator Cynthia Loomis, the Republican atop the banking panel's crypto subcommittee, said earlier this week she expects a hearing in the later half of April. She posted the image on Friday on social media that depicts this yield. All right, so big news coming for the Clarity Act. Again, we're hopefully we'll have this thing wrapped up in the next month. So more to come. Now, what will this be for? Bitcoin, Ethereum, that kind of stuff. I don't know if this is going to be bullish, per se. Like if this is really going to impact Bitcoin as much. We heard from the SEC, Paul Atkins, basically clarifying some key points and classifying Bitcoin as a commodity, right? We already knew this. It's really it's just how do they tax this stuff, but also how are they going to regulate it? And the SEC has come to the conclusion that Bitcoin is not going to get regulated by the SEC. It is not a security. It is a commodity. All right. So you still have the CFTC that's going to be managing that stuff, right? But from an IRS perspective, there's really no change to Bitcoin's classification. But they also talk about, tokenization, which will fall under the SEC. Tokenization assets which will fall. Those will be classified as securities. Meanwhile, everything else is there's like technology, tradables, art, digital art, whatever. That will all be under most likely the CFTC at that point. So let's see. So yes, we covered this. I heard the real reason the market was right was because the Q4 GDP was revised down and potentially a recession. Very highly likely. Again, we keep hearing this word, recession popping up. We covered it a lot in yesterday's stream. You have not Morgan Stanley. I keep saying Morgan Stanley. You had Moody's, Goldman Sachs, and one other institution, BofA, Bank of America. They have been putting out forecasts that they predict a recession is coming because of some of their indicators that they have. So won't be surprised if that starts to rear its ugly head in the future. Going back to geopolitics. All right, so this was the post that we got late in the evening, from President Trump. Okay, we are getting close to meeting our objectives as we can. Consider winding down our great military efforts in the Middle East with respect to the terrorist regime of Iran. Before I continue, all right, not a political channel. All right, red, blue, red, green, white. I don't care what your political affiliation is. We read the news so we can understand how it can impact our portfolios and the broader world. Okay, so I just want to put that out there. All right, completely degrading the Iranian missile capability, launchers, and everything else pertaining to them. That was one of the objectives. Destroying Iran's defense industrial base, another objective. Eliminating their Navy and Air Force, including anti-aircraft weaponry. Never allowing Iran to even get close to nuclear capability, and always being in a position where the USA can quickly and powerfully react to such a situation should it take place. And 5, protecting at the highest level our Middle Eastern allies, including Israel, Saudi Arabia, Qatar, the United Arab Emirates, Bahrain, Kuwait, and others. The Hormuz Strait will have to be guarded and policed as necessary by other nations who use it. That is a big development right there. So they want to, the Trump administration wants to shift the responsibility of protecting shipping to other countries that are using it. So, it won't. I don't know how that's going to turn out, right? That is a really big pivot from what we heard earlier, where the United States was going to start helping, ferry some of these ships through the Strait of Hormuz, right? So this is a really big development. The United States does not. All right, if asked, we will help these countries in the Hormuz efforts, but it shouldn't be necessary once Iran's threats are eradicated. Importantly, it will be an easy military operation for them. Thank you for your attention to this matter, President Donald Trump. Right. So this is a big deal, in my opinion, but for 2 reasons. One, he put the word consider in there. I hate to CSI this one word of text. But it is an important word, because the market is taking this as, nope, we're winding down. This is it. We're going to pull all the troops. We're going to, pull out all the naval assets. This is a done deal. Markets can turn green now. All right. Again, within the last day or two, you had Pete Hegseth, Secretary of War, requesting, or the Pentagon requesting, $200 billion to fund this conflict. Okay. We've already spent, 12, 13, $14 billion just in the last 14 or 12 or 14 days. Okay, it's almost $1 billion a day. There's also been news that a Marine Expeditionary Unit, an MEU or MU, is moving into the region. I thought I saw it was actually 2 MEUs and with a couple of ships and additional aircraft, right? You don't start moving those assets into the region for fun in the sun, right? They're not there just to take in the sights and the views. There's a high probability, a high likely probability that this is a fake out, just to calm the markets and to, kind of put Iran off and probably some players in the space, but it wouldn't be unheard of. And again, probabilities, there's a probability that there will be an incursion, probably on Karg Island, if anything, because that's where Iran's big industrial oil base is. So you take the energy infrastructure from there, that's going to, put troops in harm's way. So, you got to kind of factor that in as well. And they're directly in harm's way because Iran still has launch capabilities, right? Qatar, Bahrain, UAE, basically all the Middle Eastern partners have already, requested that Iran stop bombing them. They did not say they would escalate, but they kindly and politely requested Iran stop attacking their countries. So this weekend is going to be spicy. This weekend, we're going to see what happens, what Iran does. More additional of their top leadership has been eliminated in airstrikes. So it's getting really crazy. It's still continuing to get crazy in Iran. There's going to be a power vacuum at some point, and maybe not so much a regime change, but a lot of the key players, a lot of the key leadership over there that make up the regime are, getting iced. So who are they getting replaced with? How many people are getting replaced is left to be seen. And then is a new regime going to continue, right? Is going to continue attacking, the United States in the area, attacking the partner nations in the area, continuing to keep the Hormuz Strait as a toll booth, right? Ships are coming to and from, but they have to hand off some money to the Iranians, right, to keep the war going. So it is still a developing fluid, kind of a liquid environment that's going on. Let's see what we got over here. Oh my God, we got a legend up in here. RC Edson, man. Damn, I have not seen you in a hot minute. It is good to see you, man. Thank you. I appreciate it. I really do, man. I'm happy to see you back on YouTube. I hope you start pumping out some videos, man. I really do. So shout out to you. Shout out to RC Edson. If you guys haven't checked him out, definitely check out his channel. He pumps out more like personal development type of content. Really down to earth person, man. I can't speak highly enough of this guy. The red, white, and blue. Absolutely. Let's see what else we got that. So from MJ Bowhunter, take the oil, use it to offset our costs. That could be one way, but I mean, hey, the Federal Reserve is just going to keep printing money, or the Treasury is going to keep printing money. I think we're, officially above, $39 trillion in debt at this point. So, hey, whatever, they can always print more, right? Let's see what else he said. We have MJ Bowhunter also saying February and March are typically down months historically. And that is a interesting point, because if we look at the S&P 500 seasonality chart, and I haven't brought this up in a very, very long time, but if we look at the S&P 500 seasonality chart, if my thing will load here. All right, come on. Any moment now. There we go. Okay, so if we look at this, you guys can see these months right here, January, February, March, right? We're heading into April. Typically towards the end of March, we start to see that climb up. And if history is any teacher, right, this is just the historical trend, okay, of many, many years. Okay, so you guys can see the monthly averages over the past 20 years. And typically, let's see, max return for March was about 8.5%, but the minimum return was negative 12%. And we are already seeing that, the market is starting to trend down. So it is possible we can probably trend a lot lower, right? April, May, June, that's when you have all that climb high. But again, this conflict is such a wild card. We don't know what's going to happen, right? We don't know what the impacts are. The oil prices are still extremely high. And that can have some dramatic ripple effects, okay? Some really bad dramatic ripple effects. The cost of everything is going to go up. Goods, services, food, energy costs to heat and, keep your home cool. Getting to work, commuting to work, you're going to have to choose between gas and going out to eat at these restaurants. The restaurants, people are spending less, people are going less to Target, they're spending less on Amazon, et cetera. So, you can have these really bad ripple effects just from the cost of oil going up. So good point, though. And we haven't checked out this seasonality index in quite a long time. You guys could check it out here. Just Google the S&P 500 index seasonality chart. So I was following this pretty much all of last year, and it almost followed it to the T, except when we got into November, right? Once we got into November, that's when it just started going down. So, but it was also late cycle. We were already on a 4-year bull cycle. I mean, you can't keep expecting 20% years or 15% in the green years, right? At some point, there has to be a pullback, a consolidation. It's considered healthy, right? Okay. So, anyways, going back to geopolitics, Trump says he doesn't want Iran war ceasefire, but is considering winding down military operations. This is just a summary. I'm not going to go into it. All right, but President Donald Trump said he's not interested in a ceasefire with Iran, which gives me kind of an indicator or a signal that he wants this to continue. But again, as I covered yesterday, the War Powers Act, he has up to 60 and 90 days to get this pretty much concluded before, it starts to become a domestic politics issue, right? He later claimed the U.S. is considering winding down our great military efforts in the Middle East, but the Iran war began nearly 3 weeks ago and has widened into a broader regional conflict. The conflict has caused turmoil in the stock market and spurred oil prices to rise as Iran has effectively blocked the Strait of Hormuz, a critical shipping channel. You also had the Russian government say, hey, if you stop providing intelligence to Ukraine, we'll stop providing intelligence to Iran, right? There was a lot of back and forth. Russia said, no, we're not providing them any intelligence. No, not us. Why would we do that, right? And then you had the Trump administration actually say on record, at a press conference that that the Russians said that they are not providing intel and we're going to take them at their word, which is absolutely a straight buffoonery in my own opinion. Okay. Straight buffoonery. But with that being said, because I'm not going to get into it. But anyways, geopolitics segment is over. Hopefully we get some more clarity on what's going to happen this weekend with both the Clarity Act and with the geopolitical uncertainty that's happening in Iran, right? Is it going to be boots on ground? Is it going to be on Clark Island? Is it going to be on the coast? Are they going to just take some naval bases away from Iran and then stop the launches? Left to be seen. Who knows, right? But that is pretty much it. We're going to move on to a clip. All right, this is going to be a 3-minute clip for Tom Lee. All right, giving his thoughts on the market.
Tom Lee, CIO of Fundstrat, CNBC contributor. And on set, we're going to ask you to graciously, if you would, stick around for a couple of different blocks because we love Tom Lee. Thanks for coming on.
Yeah, glad to be here.
You're not changing that 7,700?
We're not.
Okay, why not?
One, I think 7,700 was a conservative estimate to start because,
and he means 7,700 by the end of 2026. Okay, so 7,700 S&P 500.
Markets have been steadily repricing on a PE basis, and we're only assuming modest PE expansion this year to 7,700. And as much as the war is creating obviously a huge short-term setback and a lot of uncertainty, including effects on monetary policy, ultimately wars are going to be good for the U.S. economy and the U.S. stock market. So I think as we get towards the end of the year, the market stops thinking less about the crisis element of this and more on the opportunity.
I know, and that's hard to say. And it's not an endorsement, by the way, of anything. I get what your point is because you look at history, and there's like the old maxim. I'm going to chunk it, but it's something like you sell on the sound of trumpets and you buy on the sound of cannons. Meaning, when things seem the worst is often when the market does what you least expect it to do. Correct?
Yeah, that's right. I mean, I think right now, if we asked any investor, they can list all the reasons why they're worried. And what could go wrong. And that's what gets priced in very quickly. But we have to know that that's counterbalanced with opportunities have always emerged. I mean, when we look at the last 8 major war events, the market was always bottoming very early into the conflict.
I have said, nobody cares what I think, but I have said that just given what I've done for 30 years, the markets feel a little too complacent, a little too sanguine maybe about what you just talked about? Go into that a little bit. Do you feel like people are a little bit too comfortable? It doesn't sound like you are. You sound like this is where we are and everything's fine.
Well, it's a good question. I was thinking about this on the way here, that we've already had a rolling bear market, because last year energy was already in a 3-year bear market, and financials had been in a downturn. The Mag 7 has been in a downturn. Tech and software, that in total is like 70% of the S&P. And we know over the last few months, before even the war started, gold was going parabolic. So in some ways, I think the market was pricing in uncertainty in a geopolitical event. And I think the reason people are maybe, as you're saying, somewhat complacent, I think people have de-risked already.
How do we say they've de-risked when markets are down like 4 or 5% this year, and in a midterm election year, which is this year, by the way, historically going back 100 or whatever years, the S&P tends to fall about 15% once on average in a midterm election year. We're only down 5. That seems complacent to me.
Yeah, it's a good point. I think we have to look at global stocks. Last year, more money was made owning emerging markets, owning gold over stocks. Emerging markets have corrected a lot more than the S&P has, because the world is worried about growth. And as you worry about growth, you want to own the growth index, which is the S&P 500. Point. I think we have to.
Yeah. So, we could see that, international emerging, one of them that was pretty notable was South Korea's ETF. This one was just like on this crazy run. I mean, you look at the 1 year, before it started correcting, let's see, I'll just take it from here. There we go. Yeah, it was up 126%, but year to date, it looks like it's been a pretty decent correction, down 12, almost 13%, but it's still in the green, still beating the S&P 500, right? But a lot of emerging markets, a lot of international funds were doing very well, right? Everyone's getting their money out of the S&P 500, out of tech, out of U.S. based companies, and moving overseas. Me personally, I didn't do any of that, right? I don't believe in international companies as much as I do in American based companies. Maybe that'll come back to bite me in the ass, but I don't know. I mean, I take that old Warren Buffett approach. Don't bet against America. America is the most innovative country in the world. Okay. All of the innovation comes from America. China, and I'm very vehement, I will die on this hill. China is great at copying the United States, but they are not great at innovating. Okay. But that is not to say that they can't innovate. All right. Don't get that twisted either. I'm just saying that history has shown that they steal a lot of American technology. They copy a lot of American technology. Kevin O'Leary's, pretty popular for saying, saying what most people won't say, and that, to do business in China from an American perspective is very difficult, because once you start a product or a service over there, you have the copycats come out like crazy, and there's no legal recourse for you to get your stuff, right? To get your patent, to get your IP, your intellectual property protected. There's just no recourse for that. So that's, a crappy thing. But in America, Chinese companies can sue left and right if they really want to, right? So that, again, just my opinion. I just will not bet against America. Yes, we might have one bad year. Yes, we might have 2 bad years. Yes, there might be even 10 years, right? We have a lost decade, 2000 to 2008 or 9. So yes, we do have that lost decade as well. But I still will not bet against America, regardless. All right. So just my thoughts. Anyways, I have a question here from MJ Bowhunter. Have you been adding BMNR on recent pullbacks? Hell yes, I have. Yes, I have. I don't have the receipts handy with me right now, but I have been dumping in. Let me pull it up, because I don't want to mislead you guys. Hold on a second. I will pull that up. All right. So for anyone who's new to the channel or new to, this kind of stuff, BMNR is an Ethereum treasury company. It's headed by Tom Lee. I have been adding to my position for BMNR. Let me see if I can pull it up. I actually want to add, I'm waiting to add more, to be honest, because I think, we're probably going to be chopping sideways for a little while, a 10% gain here, 10% loss here. This will continue, in my opinion, for a little while, at least until maybe October timeframe. And that's strictly based on the 4-year cycle for Bitcoin. If you understand or believe in, the Bitcoin Ethereum ratios, then you'll know, or at least I agree with that. If Bitcoin starts its new run, its new bull cycle sometime in October, after October, Ethereum will reach it, right? We'll track along with it. I can't see a world where Ethereum front runs Bitcoin, right? I just personally can't see that. So I'm trying to be a little more strategic with my buys. I was buying like crazy. Tom Lee did say, and a lot of people for Bitcoin said that, February was the low. February was the low for both assets, for Ethereum and for Bitcoin. So after all of this, it should just keep chopping. That doesn't mean it can't go lower, but it'll just keep chopping up until about October timeframe. So let me pull up those receipts for you guys. Let's see. So yeah, so here is, I gotta make sure. Yeah, so here's my buys. All right, so I put 10,000 in, I bought 475 shares on March 11th, 520 shares on March 9th. I do want to put in another big order if we get into the 1918s range. If we don't, we don't, whatever. I mean, I'll still continue to add to BM&R. I'm very bullish on BM&R and the potential for this stock. If you do the math, BM&R could potentially reach a share price of $500 a share. And right now it's $20. I mean, that's a pretty damn good asymmetric bet in my opinion. But again, don't borrow my conviction, not financial advice. Do your own due diligence. I could be completely wrong and this thing could go to zero, right? It's a very high possibility, but you have to believe in the management and have conviction in the management, right? Tom Lee is the spokesperson, is the chairman for BM&R. I do like Tom Lee. I like everything he says. I'm a big fan of Tom Lee. BM&R, again, Ethereum treasury, but what he transformed, or what him and the team transformed BM&R into, I think is it's the next MSTR. All right, it's the next MSTR, and I'm a big believer in MSTR as well. So, anyways, let me get off that tangent. I just wanted to answer that question. So Brett Langridge says, is there a limited supply of ETH? No, the answer is no. However, what does make ETH, I guess the supply come down is the burn, right? Is the gas burn. So I don't know. I don't fully understand, the underlying technology of Ethereum, but I know that they do burn Ethereum. There is an Ethereum burn that does happen to keep the supply from overinflating. But you also have what makes Ethereum attractive, again, in just my opinion, based on my research. Feel free to dissect it or disagree with it. But what makes Ethereum so attractive is all these financial institutions are moving onto the Ethereum Rail blockchain, right? And when they do that, when they're transacting on Ethereum, there's gas fees that they're going to have to pay, and that can directly influence Ethereum's price. How they do the gas burns, I'm not 100% sure on. I keep forgetting to actually deep dive this stuff. I have so much crap I got to deep dive, but how they actually burn the tokens, they do it when these transactions happen as well, if I'm not mistaken. So I'm talking completely out of my butt. All right. Do your own research. Please do your own research. Don't borrow my conviction. But yes, that is Ethereum. Let's see. Real quick, we also have bullish on NIHI and BTCI. So NEOS, I believe that NIHI is the Ethereum and BTCI is for Bitcoin. And then we also have from MJ Bowhunter, I've been using cash secure puts to add BM&R, so I get a little extra money by doing this. That's awesome. That's awesome to hear. Let's see what else. So when needed XRP and Solana treasury, that I don't know. I know there were some companies that were starting up a XRP and Solana treasury. I believe that is a little too much, in my opinion. I believe that is a little too much. That's when you know there's too much froth or that we've hit a top. Is when you start having all these other treasuries come out. I don't know too much about Solana. I know it's highly regarded as kind of the top 5 crypto coins, if I'm not mistaken. So within the same basket as a Bitcoin or an Ethereum. Let's see what else we have. JVMZ, howdy everyone. From 150% up to margin call. I'm in the red light district, brother, man. I feel your pain. I'm right there with you, man. I haven't hit a margin call yet. And I'm watching that number. That's why I'm holding so much dry powder, so much cash on the side, so I don't get into a margin call. And again, if we continue to grind lower, right, a grind lower scenario where the market just keeps dropping, we hit, that negative 15, 20%, I should, in theory, based on some math that ChatGPT did for me, I should be okay. But margin call is not the end of the world. It just sucks because you have to find some cash, laying around. You might have to sell some assets. For me, my biggest losers right now is IBIT, Bitcoin, and some of the weekly pay ETFs, PLTW, NVDW, and HOW, as well as BM&R. But I plan never to sell those. I have no intention of selling those. So we'll just leave those as is. I'll sell everything else before I sell those. Okay, so moving on. Let's listen to Truist Keith Lerner. I haven't seen this video yet, but I have seen Truist, come onto the show before. So I just want to listen to what they have to say, because they're saying that indicators are showing we are oversold for the market, for the S&P 500, which, I mean, we might lead into a relief rally, right? A quick relief rally, and then trend lower. So let's listen to what he has to say.
Truist Wealth's Chief Investment Officer. Keith, good to see you here. I mean, obviously, we've been in this mode all month where.
So real quick, JVMZ, I like this attitude. Like, that is me. That is me as well. I've learned a lot over this last year, especially when it comes to, one is mindset, right? I hate to use that word because it's so like, foo-foo, but it is mindset. A big thing of it is mindset. I learned a lot about listening to other people and tricking myself, right? Because I would, like, when I was doing a lot of the YouTube videos, I was hopping in and out, doing all these new strategies, right? Which was negatively impacting my portfolio. Big deal, right? But when I have a conviction in something, right, you'd have this wall of FUD come out, right? Even people on YouTube, in the comment sections, even in my own Discord, right? People coming out saying, "Oh man, that's stupid. Don't be buying that trash, yada, 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 blah, blah, blah." And I mean, for the short term, they were right. A lot of these things, BM&R, MSTW, MSTR, Bitcoin have went down. But I still have high conviction in that, right? At some points, you start to question yourself, like, did I make the right move? Was it a good move? Did I just royally screw myself? Right. I've learned a lot. I've been discouraged myself. But it is absolutely a learning experience, right? You just learn, you just improve, right? You reflect on all the bad crap that happened. For me, I mean, I saw my portfolio drop 100K. Right. I mean, that was from October, November, December, right? I just saw my portfolio drop 100K. And I mean, I'm looking at this, I'm like, I need to sell stuff, but I didn't. And, I'm leaning on my convictions and everything else. They still haven't come true, right? They still haven't played out, but I believe they will, right? I believe they absolutely will. Are you a trader or are you an investor, right? I mean, that's also comes into it. And the funny thing is, you're going to have people come into the space, right? You're going to see people, come into your headspace. Some people will say index investing is the best thing, right? That's how they made their millions. You'll see commodity investors who invest in oil, gold, silver, metals, millionaire, right? They'll say that is the best way to invest, right? Then you'll see Bitcoin traders, crypto traders that say, no, this is the best way to make a million, right? This is the best way. And they'll all disagree with each other. At the end of the day, you need to do what's best for you, right? What makes the most sense for you. And that's what I've at least come to, for myself is, hey, this is the way I like to invest. So I'm not listening to a lot of people, especially in the ETF space, high yield space, investing finance space. It's just new ETF after new ETF after new ETF. And it's like, you're spreading your money thin, you're buying this and that, you're listening to other people. And then, you're not even really investing in things you really like trust or things you really like. You're borrowing other people's convictions. And that can be dangerous, right? That can be dangerous. At least that's coming, some of my own personal lesson learned. So I just wanted to share that. Let's see. So Pay the Piper says sell calls on your BM&R shares, ? I mean, you can, yeah. I'm not, I don't want to sell away any of my shares. That's just pretty much me. I've been buying MSTR and BM&R and feel it is a safety boat in an ocean of fiat currency. That's my conviction too, right? BM&R, MSTR, well, for me, it's MSTW. That is my belief as well. Like, I think fiat currency, the government is not going to get fiscally responsible tomorrow or next year or in 10 years. They're not going to get fiscally responsible. So gold, Bitcoin, anything not fiat currency, right, is going to do well. Assets in general are going to do well over the next decade. Okay, so unfortunately, there will be that group of people that don't invest, that hold cash, right? That only hold cash, put it in their sock under the bed, or put in a high yield savings account, right? Unfortunately, there will be those people, and they're not going to do so well over these next couple of years. MSTR, BMNR, it doesn't matter. Index fund, S&P 500, QQQ, whatever, right? Just assets in general are going to do well over the next decade. Let's see. JVMZ says, absolutely, I'm learning and staying the course. That's what I'm talking about, man. That is absolutely what I'm doing. That's why I show up, or at least try to show up every day to these streams, because I'm still learning, right? I'm not the smartest person in the room. I learned a lot from a lot of commenters, a lot of people in the chat. Like, I've learned a lot of different things, right? And there are some great, YouTubers out there as well that share their own wisdom experience, that have like really good professional backgrounds. I mean, when before can you say you could at least hear fund managers, right? Or master investors, right? You can see interviews for Bill Ackman, Howard Marks, hell, even on X, right? Even on X Spaces, you could actually hear Grant Cardone speaking in these X Spaces, which is wild. Like, he's a multi-billionaire. Why the hell would he be wasting time on social media? But you can actually join his X Space and hear what he has to say. It's really, really cool. Like, when in another time in history could you actually listen to billionaires without paying some absorbent fee to attend a conference, right? All of it's on YouTube now. All of it's live on X. It is like, we're really spoiled at this point. Anyways, let's continue on with this.
The market is obviously registering the pressure from higher oil, higher interest rates, and maybe a little bit of a growth slowdown, but really been grudging in its declines. Are we oversold yet? How are you tactically thinking about this market?
Yeah, well, great to be with you. I think, Mike, the way you characterized it before, as far as the market being confused, is probably the right analogy right now. So listen, I still think that this bull market, or the way the evidence in our work, still suggests the bull market does deserve the benefit of the doubt. But because it's been so orderly, our indicators are moving, towards oversold. Kind of mentioned this before. The percentage of bears in the AAII is at 52%. We're seeing put-to-call ratios move up. Actually, a lot of selling in the Spiders ETF. So you're getting there, but you haven't had a flush out. Obviously, you don't always get that. But I would even tell you that anecdotally, I'm traveling, talking with advisors and clients, there's really not that much time. So I think ultimately we still likely have a bit more to go. Ultimately, we think it will be a buying opportunity. But at this point, we still think it's more of a mixed risk reward on a short-term basis.
There's a lot of commentary about, on a month-to-date basis, since the hostilities started, the S&P's down, I guess now right around 5%. It's down like 6% from all-time highs. That doesn't seem like enough maybe to account for all that's gone on. On the other hand, we're at levels we first reached over 6 months ago in the S&P 500. The median stock in the S&P is like 16% off of its 52-week high. And arguably, if stocks kept pace with earnings growth, the S&P would be like at 7,200, right? So I just think it's interesting to try to do the counterfactual of where we would have been otherwise.
No, that's a good point. And maybe one good point to what you're bringing up is, like, we didn't go into this, at least at the S&P 500 level, like really extended. We've been moving sideways since tech peaked in October. And really where you saw more damage, where you're down 7, 8, 9% is, small caps and mid caps, or even some of the areas that just had really moved up, quite a bit ahead of this. I will say the other thing, as we're going through this, the things that we talked about today, maybe a little bit slower economic growth, maybe the Fed is on hold for longer, maybe a little bit higher oil prices for longer. I do think that really upends to some extent kind of this broadening trade that everyone was leaning into right now, and even small caps. I mean, at this point, we're still maintaining some exposure there, but we also at this point think that maybe tech will eventually come back alive here, given some of the uncertainties, and they've repriced by about 30% from the highs as far as evaluation.
Right.
Some of the worst performing sectors this week: consumer staples at the bottom of the pack this week, down I think 4%. 4% as a group, and healthcare. I mean, these are defensive places that you would go if the market was really worried about growth. So, do you think that is mispriced, underpriced?
Well, I think in some ways, even like consumer staples, we have to remember they were up double digits ahead of time. Same thing with gold. Gold had such a big move ahead of this. So that's what's somewhat confusing. But on the same token, I think what's happened is some of these areas that tend to be more defensive had big run-ups ahead of this and aren't acting that same way. And then also some like staples, there's probably some concerns around just the inflation impact and the ability to push those cores higher, especially if we have an economy that is, 1 foot on the gas, 1 foot on the brake right now. And as all these expectations as far as an uptick have now receded for the economy, at least in the near term.
And we were just obviously talking about a pretty complex interplay of growth and inflation when it comes to what the Fed is going to do. What are your expectations now? And I guess, do you think the economy can withstand a sort of wait and see Fed along with oil doing what it's doing?
Yeah, our house view is still 2 rate cuts by the end of the year. Obviously, when the chairman of the Fed says, "Hey, our forecasts right now are somewhat useless," when the Fed chairman says that, you also have to say it does depend on what happens with oil in the near term. But I think ultimately, to your other question, I think the market can withstand the Fed on the sidelines. I think the other thing, as you kind of step back, I mean, our companies in this economy has been battle tested, right? Think about COVID, the fastest rate hikes we've seen since the 80s, the highest inflation since the 70s. Our companies have adapted. It does slow things down, but I still think the economy and markets ultimately still earn that benefit of the doubt. But I think it's going to be a bit of a slog here, and we're all watching the same thing. What are oil prices doing, and what is the 10-year doing to really help? What we really need is stability in those areas for the market to regain its footing.
Yeah, for sure. I mean, hints of that, though. We do have the S&P off about 0.75%. Keith, thanks very much. Talk to you again soon.
Yep. So, people are flocking to defensives, thinking that the defensives would have been safe, but they're not acting that way. We see that happening with gold, and even some of the companies out there. Let's see if we could pull up one that would definitely be a defensive stock. Let's see how Walmart's doing. I think Walmart would probably be a good one. Yeah, even Walmart's starting to come down a bit, right? XLE. Is the energy ETF. Okay, so we covered this yesterday, but XLE has actually just been on this crazy climb up, right? Crazy climb up. This would be more or less a defensive ETF or defensive sector. But we can see the max. I mean, look, it's finally having its breakout. It's been in this crazy, they call it a bear market, but it's been in this, I guess you could call it a bear market. I mean, that's dramatic. Holy hell. I never even really stopped to appreciate that. Yeah. Down almost 50%, right? Down, well, actually 70%. Oh my God. And now it's having this really crazy run up, right? But if short-term history is any teacher, we know things that have a very sharp decline or incline will have a sharp decline at some point. All right. So, but this could be the breakout because again, you still have data centers being built out. I say this on every stream, but you have data centers being built out, grid upgrades that are going to be happening in the United States. And you're going to need all these companies to be able to do this, right? And to produce that power for a national security agenda, which is, AI. So anyways, I'm not gonna show this clip, but well, actually, maybe let's see. It's only 3 minutes, but Google is actually pursuing the contracts as well from the Pentagon that Anthropic had lost, and then you had OpenAI step in and say, "We'll take that off your hands. Don't worry about it." Right now, Anthropic is trying to go for a lawsuit to get the supply chain risk designation removed from the company, but you also have them saying, "Hey, we want our contracts reinstated," right? So we got to see how that's going to play out in the courts. And the whole thing stemmed from Anthropic saying that they don't want their software, Claude, artificial intelligence LLM, to be used for automated weapons or autonomous weaponry or mass surveillance, right? Mass surveillance, whatever that could mean. And the Department of War came back and said, "You know what? Screw it. We're just going to cut you off, right? We're going to use it for all lawful purposes." And the CTO for the Department of War, if I'm not mistaken, was coming out and saying that it's been an issue with Anthropic because they kept coming at every term and trying to define down specifically what each of the requirements for their terms of service was, right? And finally, the Department of War said, "Look, we're going to do it for all lawful purposes. We're not going to just do things on a whim. They have to follow, a ton of rules, a ton of laws. They can't just be out there, doing mass surveillance on American citizens, right? But could they be doing it on enemies that the Department of War is going after? Yes. But, again, there's that clause, mass surveillance. So what does mass surveillance mean, right? And it turned into this big thing. And of course, that sets a really crazy precedent. It's a crazy can of worms because now you're going to have all these other LLMs that are going to have to figure this out as well. You start running into ethics problems and all that kind of stuff. But let's listen in on Google pursuing the Pentagon contract as well.
Google's looking to take advantage of this battle between Anthropic and the Pentagon, even as their own employees side with.
Before I get into that, are you going to talk about SMCI again? I think I beat it into the bush again. I'm so glad that this company is getting destroyed. I'm so glad their stock price has dropped another 30%. I'm glad that some of the executives are getting caught in their bullshit, because they were fudging the numbers on accounting, right? They were doing a lot of bad crap, right? And shareholders are the ones that have to deal with this. The company, in my opinion, the company itself, the hardware, the product and service that they offer is top notch. It is good, but it's good that the C-suite executives are getting called out and getting basically put in jail, hopefully put in jail, right? Because they were going behind the U.S. government's back and selling this very sensitive equipment to China. Their server racks with NVIDIA GPUs in them. They're not supposed to be doing that. I found a funny meme. Let me just post this meme and then we'll watch this clip, all right? Because I thought this was hilarious. All right, so for people who don't know, that the one of the co-founders was already really, really rich, okay, to the tune of $500 million. Okay, so this guy was already rich, all right, but smuggling GPUs to China, despite already having a net worth of 500 million, that is pure love of the game. That is absolute pure love of the game, right? Like, why would you need? And he was the one. He was actually the one who was with a hairdryer, blowing on the stickers to get them off so he could put them on other servers, right? Like, he was the actual one doing this. Like, that is absolutely crazy. That one of this, co-founders of this company doing that. I mean, you're way at the top. You don't need to be doing that. You can have one of your minions go do it, but he was the one that was doing it, which is absolutely insane. Anyways, let's get back to this clip.
In the battle against the Department of Defense. Our Mackenzie Sagalos has that story in today's Tech Check. Morning, Mac.
Hey, Carl. So you've got Anthropic heading to court with the Pentagon on Tuesday, OpenAI taking heat for rushing into a defense deal. So really, the biggest beneficiary so far may actually be Google, which has worked hard to stay out of the spotlight since the Iran war began. Now, BI reporting that in a January DeepMind town hall, weeks before Anthropic's Pentagon battle, CEO Demis Hassabis told staff he was very comfortable pushing deeper into national security work. Now, by that point, Google had already updated its AI principles to remove a commitment not to develop weapons or surveillance technology. And then separately, the Times reported that Google Cloud CEO Thomas Kurian met with Emil Michael, the Pentagon official in charge of selecting AI tools, back on February 26th. That's the same day that Anthropic's talks collapsed. So Kurian, he was reportedly there to pitch an expanded partnership, with the message being Google can deliver the same caliber AI tools without all this noise. Now, Google, it's not responding to requests for comment on either of these meetings. But since then, Google has landed a new deal to deploy AI agents across the Pentagon's unclassified networks. And remember, this is a company that abandoned military AI after employees revolted over Project Maven back in 2018. And now they're positioned to.
And who got that Project Maven? Palantir. Palantir took that. Right. Meanwhile, Google was dealing with their revolt, their internal, employees saying that, hey, I thought one of the values of Google was do no evil. And here we are, supporting, some type of technology that can harm other people, and turned into this big fiasco years and years ago. And then Palantir stepped in and took that. And then here we are today with, Palantir having basically that entire contract today.
Become one of the government's primary AI providers. But this push with the Pentagon risks reigniting old internal fault lines at the company. Google's own researchers, including Chief Scientist Jeff Dean, have filed briefs backing Anthropic's lawsuit against the very department that Google is now reportedly actively courting. Guys?
I mean, does Google have a problem with its employees? Why does it do so many things that its employees aren't on board with? Does management need to be more clear with the goals and the purpose of what's going on, like a Palantir, Alex Karp, for instance, where they know what they're getting into?
What I will say is that the message that the DeepMind team management was sending home in January reiterated a point they had made repeatedly at these internal all hands over the course of the last year, basically ever since they adjusted their AI principles when we saw a change of leadership at the White House. But broadly speaking, the employees at DeepMind are not alone. You also saw a lot of OpenAI staff commit to these letters protesting Anthropic's designation as a supply chain risk, really coming to their defense. It was actually quite a departure to see big tech jumping in with Microsoft filing that amicus brief when arguably they have a lot more to lose. They have a lot of government contracts, but you see that same kind of sentiment across the Bay about what Anthropic's going through right now among the employee base.
Companies have three basic constituencies: their customers, their shareholders, and their employees. And it's just a matter of how they prioritize those and how that changes over time, as in the case of Google. Mac, pretty.
All right. So, Google's going to go after that contract. They're going to be probably competing with OpenAI. Anthropic is obviously trying to get that contract back. So we'll see if this is bullish for Google. Obviously not, because looks like Google sold off on that news. So we'll see. But I think, I think Google, they had to have a dramatic change. And Alex Karp touched on this quite a bit in just multiple interviews, right? He said Silicon Valley was trying to influence, the direction of what these companies like. Let me collect my thoughts here. So and I'm trying not to be political, and I'm not trying to choose sides. I'm trying to be as objective as possible. But the problem with Google was that they let their employees try to dictate what contracts they would take, right? And if the Department of War or the government is using their software, and there's a war going on or something is happening, right, where they need to use their software to accomplish a mission or do something, you would have these employees who, for one reason or another, had an ideology of their own and didn't want to be a part of a company that was supporting these war efforts. So that's where Google slipped up. That's where Google lost the Maven project. And, again, Alex Karp has mentioned this multiple times, that his company, Palantir, and their kind of core values, what they want to give the warfighter unfair advantage. So they will use whatever means they have in order to accomplish that goal. But meanwhile, you have at Google and probably some other software companies as well, bringing their own personal ethics into all of this, as we saw with Anthropic, which obviously didn't turn out well, especially with this administration, right? This administration is not going to waste time. They don't want to be held at the behest of, a certain type of crowd. I'm not going to mention that crowd, but they don't want to be held. They don't want to be held hostage for that, right? They have objectives that they need to accomplish. So we'll see what happens with Google, and if they're able to secure that contract or not. They like it was mentioned in the clip, they're deploying their own AI agents on the unclassified network for the military. That is a big deal. Because one, the government is not exactly fast at adopting technology, not exactly fast. So this is a huge change, a huge shift for at least for the government. All right, so let's see what else we have here. We have from DTommyTube. All right, probably a future layoff after this at Google. I would not be surprised either. Let's see. Sorry, Claude, you missed the train, says Sergio. Well, that's all it, guys. That's everything I have for the news. All right, that's it. I will still be here. We're at the top of the hour, so I'll be here for another 15, 20 minutes. If anyone has any questions or any ETFs you guys want to bring up, or I will put a link in the chat, in the YouTube chat, if anyone wants to come on. And of course, just keep it PG, but you can at least tell us what you're doing, or if you have any feedback for the stream, feedback for some of the news that we covered. All right, so I'm just getting my red light therapy here. It's nice and red. It's not even a Christmas tree at this point, or Christmas lights. Let's see, real estate not doing so hot, so that's let's see, how is VNQ doing? We haven't looked at VNQ in a long time. VNQ ETF. All right, so let's see. Yeah, VNQ is getting clobbered too. Oh my God, that sucks. Look at that. Down almost 8%, 7.5%. And real estate's supposed to do well, but we have that 10-year that's just not letting up, right? The 10-year treasury that's just not letting up. Right around this time, you guys can see it. Let's see if we do. Yeah, we could do this year to date. So this is right around the time that the 10-year treasury was going down, right? And we actually saw it sub 4%. and then it started to spike up again, and then real estate sold off. So that's how the 10-year treasury influences real estate, especially commercial real estate. Let's see, not cuts either for REITs. Yeah, REITs are getting clobbered too. And for those who are joining or who are not even familiar with what a REIT is, a REIT is a real estate index, or excuse me, a real estate investment trust, if I remember correctly. Yes, a REIT is a real estate investment trust. Basically, it's a company that goes out and buys a bunch of real estate. So, commercial multifamily buildings, single family homes, data centers, you have cell towers, you have billboards, you have farmland, you have what else we got out there? Storage, right? PSA is a big one. You have triple net lease, or realty income is another big one, right? So the company goes out and buys this real estate, and you as an investor, you get to benefit from the share price, right? As well as a dividend. And REITs are required by law to pay out about 90% of their income to investors in the form of a dividend. So REITs are very, very attractive for the investors who want exposure to real estate without owning a rental property. I have held both, right, REITs and rental properties, and I could honestly say from just my experience, your experience may vary, that REITs are just far more superior than rental properties. You're not going to be dealing with tenants, toilets, trash, taxes, all that garbage that comes with owning rental properties. It could be a huge headache, right? And you're not going to get a call from your REIT that you have a meth head in your place cooking up a bunch of crack, right? You're not going to get those calls, but you will have those wild swings and those bear markets like we're seeing for REITs, right? This is a REIT index, so think of something like a like a S&P 500, but this is specifically for real estate, real estate stocks. So there's also two types of real estate stocks. All right. There's mortgage REITs, and then there's regular equity REITs. The equity REITs are your commercial real estate, asset classes. The mortgage REITs are companies that originate loans. So, you and I or companies can go out and buy real estate. Some people love mortgage REITs because they pay out such a high distribution. Now, these were the high yield instruments of the old day. You had yields upwards of like 7 to 10 to 12, 15%. Nowadays, a lot of people, at least I know of, don't really buy mortgage REITs anymore. They're more of like the old school stuff. But I mean, we can look at like AGNC, which is a big one. Look at this 15% yield for AGNC, right? No NAV erosion. No, this is the classical just share price erosion, right? But yeah, this is AGNC. Let's see what we have here. Again, from Brett, Netflix had a little bounce today. Let's take a look at Netflix. Look at that. A little bit of a bounce. You weren't kidding. You are definitely not kidding. Let's see how it's doing year to date. Oh my God. Look at that. 30% up. Man. I love my Netflix account. We also have from Brett, gold, silver, and Bitcoin, Ethereum is all I need. GDX or GLDX, SLV, and MSTR BMNR are bonus in my portfolio. I'm going to agree with you right there because I also have, I don't have any spot price Ethereum in my portfolio. Like I don't have like an Ethereum ETF or anything. I do hold IBIT. IBIT's I'm trying to get the 2 Bitcoin and IBIT shares. But we also have GLDX, which is it GLDX or is it GDX that you're thinking of, or GLDW or GDXW? I mean, there's a couple in there. I'm assuming you mean GDX, which is a gold miner. So gold miner and SLV is silver's spot price. But yeah, I mean, you pretty much have the full gamut of assets right there. Bitcoin, Ethereum, gold, silver, and then the high convex MSTR and BMNR, right? So those are the whenever Bitcoin, Ethereum has their run-ups, MSTR, BMNR should outperform the Bitcoin and Ethereum run-ups by a huge factor. So left to be seen, right? We're all waiting on that. So let's see what else we can take a look at. Let's see. Take a look at State Street, see what is going on over here. So this is State Street over the last day. And again, this is as of March 20th. Okay, so this is the most recent. So again, everyone's selling out, flocking to cash, getting their money out over the last 5 days. Energy is the only thing that was pumped. Everyone else is selling out of everything. I mean, when we saw that clip where he's talking about selling out of defensive, I mean, look, real estate, healthcare, consumer discretionary materials, all that, consumer staples, all that's getting sold off. And everyone appears to be buying energy, right? Everyone is appearing to buy energy. So, and over year to date, look at the energy, man, look at energy. It's doing the best right now. But as the saying goes, right? Steep incline. It's going to be a sharp decline at some point. Nothing goes up into the right forever. Let's see what else we got. I'm going to check to see if there's any new ETFs that dropped. Let's see. Stock analysis, I think is, let's see, any new launches? Oh boy. Okay, so Wisdom Tree dropped one. Ooh, an equal weighted triple Q. Oh yeah, that's right. Xbox came out. But Xbox is just short duration treasuries, if I'm not mistaken. SanDisk, T-Rex 2X long came out. Yeah, that's right. For all you high yield aficionados out there, Quadruple D came out. Quadruple D from Yield Max, which is supposed to be SCHD on steroids. Let's see what we have here. HC Wainwright and Co. analyst Raghuram Selvaraju reiterates ABO, with a buy and maintains a $20 price target. Well, let's take a look. What is ABO? And well, you can't, maybe a swing trade. I mean, $20, man. That's crazy. Let's see. Oh man, how can we'll just use Yahoo Finance for this one. I mean, I don't know anything about this company. I mean, I'll tell you that right up front. Jesus. It's all 100% profit margin. What the hell are they doing over here? Well, that's awesome. Thanks for sharing. Michael Anthony, shout out to you. Thanks for sharing that. There's a ticker for you guys to take a look at it if you're interested. Dude from SMCI looks like he has a cheap hairpiece on his head. Man, I'm just glad SMCI is getting clobbered. I'm so happy, man. Like, they just deserved it. 100% they deserve it. Look at that, 33% on the day. God. Oof. Look at these drops. They always be having these crazy drops. Fudging the numbers, lying to investors, right? I remember there was, I don't want to, I'm not faulting people who hyped up SMCI around this time because it was all in YouTube land. Everyone was talking about how crazy SMCI is going to be. It's a generational wealth opportunity. People were buying SMCI but not showing their receipts, right? They're saying, oh yeah, I just purchased 300 shares or 3,000 shares, or I just dropped $300,000. There's one particular YouTuber that comes to mind that actually said that, right? I dropped $300,000 into SMCI. It's a generational wealth opportunity, right? Then it dipped. Everyone say, oh, buy the dip. And then here we are today, right? Due diligence, man. Due diligence is a hell of a thing, right? Due diligence is a hell of a thing. The people who really came out with the bear case for SMCI or the short was Hindenburg Research. And this is what I based all my stuff off of, was just this, right? This is why I will never trust SMCI, and I'm glad that they're getting rid of all of their damn no good C-suite people, right? The people who are actually screwing this company over. Because again, in my opinion, it is a great company. It's just they have some people in the background who probably shouldn't be doing stuff, right? Damn. Let's see. There's also another funny. Let me see if I can pull it up. This one came from within the community, from the Discord. Oh my God. Jensen Wong. They expect one of us in the wreckage, brother. Because Jensen Wong, NVIDIA is definitely getting some of that money, right? Some of that kickback for selling chips, right? For selling those Blackwells. And he can't be the one that was caught. It's gonna have to be this bro. Oh my God. Let's see. Oh, but yeah, going back to SMCI, there was a what was it, SMCX, I think is the ticker, which is from Defiance. SMCX, I think it is, which is a 2x long. Yeah, 2x long. Let's see if we can get the chart. I guess we can't, but yeah, this was up 50, I think 50%, 60% now. No, I need, how's this? No, this isn't right. Oh, it's 2x long. I meant 2x short. Yeah, my bad. I think it's let's see. SMC. Is it SMCU? I forget. 2x short. SMCZ, there it is. Let's see if we can pull up a chart here. If I can learn how to type. Nope. Okay. Well, anyways, we can see, yeah. This is a short ETF up 66% on the day. Imagine if you dropped 100K, you'd be up 60,000, right? 66,000. That would have been sweet. That would have been sweet, man. But I think it's already too late to get in the short right now. I wouldn't be surprised if this stock starts to pump on Monday, because people are going to be buying the dip. And speaking of buying the dip, I think let's finish off this stream with one last video. Let's see. So Michael Anthony says, I've been saying with SMCI many times had accounting problems at selling stolen parts in China. Yep. I've been a bear on SMCI for a year and change. I mean, I don't trust SMCI. Never did. When they had that big accounting fiasco that happened last year, I mean, that should have been a telltale sign when you have one of the top 5 accounting firms self-firing themselves, saying that we don't want to deal with SMCI. We don't want to deal with any of their books. We're going to just show ourselves out. That should have been a big, big red flag, right? A massive red flag. But people, want to buy the dip, and they think, oh, this is still a great opportunity, and blah, 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 blah. But here we are today. All right, so we'll finish off this video with one last video, or finish off the stream with one last video. All right, so here we go, guys. I think I'll probably get copyright strike for this.
Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you, with you. Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it, buy the dip, buy the dip. Here we go, come on, push it. Oh my God, what's happening?
First of all this whining by Wall Street is making me sick. 140% of GameStop was short. GameStop was short. You can't allow Wall Street to short 75% of its stock, crush these companies into the dirt, thousands of stocks into the dirt. Then when the individual makes money, everyone's entrepreneurs. I have a kid who bought a house, paid $50,000 and bought a house. After decades of the short, you have to accept the fact that individual investors are playing the same game that you're playing, and now you're losing.
Here we go. Come on, push it. Buying the dip, buying the dip. Here we go. Come on, push it. Buying the dip, buying the dip.
All right, ladies and gentlemen, I think that'll do it for me. You guys enjoy your weekend. All right, go out, touch some grass. Hope you guys have a great weekend, or maybe touch some snow. I know it's still cold in some places. For me, I'm definitely going to get out and away from this desk. So with that being said, you guys have a great evening, great rest of your day, wherever you are in the world. And I will see you guys in the next stream. Take care.